What are the themes that are finding favor? 2022 saw PSU banks, saw defense, saw the re-emergence of auto and auto anchs, which you guys had pointed out back in 2022 start, right? And it did very well for you. It's 2023 or FY24, if I can use that term, because it's the start of that year, so to say. Where is it that you are fishing in?
So this year, again, I think within the financials, I think the NBFCs, could probably slightly do better than what they did last year, because as rates have peaked out and rates probably come down, you will see the NIM expansion in NBFC, which you have seen in the banks, in the last few quarters.
Got it.
So that could be one slight shift within the whole banking and financial services space, where you could see that shift there moving in. Apart from that, I think it will still be focused on the domestic sector. So I think consumption is where I think, again, one would be positive, because while rural is still picking up, it's not like doing very well. But as we move forward in the year, I think we believe that during the election year, I think you will see some kind of a boost to consumption. I think latter part of this fiscal year. And in the current environment where there are some challenges of growth global, I think consumption sector, which probably looks to be much steady, and I think that could do well. Within that, I think discretionary consumption is where one would try to build the portfolio, if I'm taking a 2 to 3 year view, because there has been some slowdown there. We've seen correction in the consumer discretionary names in the last 1 or 2 quarters. And this would obviously be a slightly higher growth sector than the normal staples. And in India, structurally is poised for better growth, where discretionary consumption as a part of the total consumption will steadily increase as per capita income goes up, as premiumization happens. So I think that would be a sector where structurally will be positive, and in this current weak environment could be a good time to look at it if from a 3 year perspective. Apart from that, sector like pharma, for example, as a defensive, which underperformed last year, because coming out of the COVID, the base was very high. I think that is now normalizing. Even in the export front of the US generics market, we're seeing some kind of, the pressure which was there on the pricing has kind of slightly abated. And there's some amount of consolidation, which is happening, which is good news. And domestic growth should be steady. So pharmaceutical, healthcare would be, again, good defensives, to look at. Valuations also not too expensive, near the long-term average. And then finally, to play the domestic cyclical, I think the industrials, the capital investments related stocks will also do well, because we are now kind of getting into a kind of a beginning of a private capex cycle. Still early. It might take another 9 to 12 months before you see momentum over there. But that's where I think you would see the delta change happening.